One stock just cracked today's top 5 for July 15th. LCID. Lucid Motors just got hammered down 16% on 8 times normal volume. That's not a slow drift downward. That's a cliff collapse. And the trigger cutting deepest is brutal. Bankruptcy rumors. The company denies it, says the reports are completely false. But when a stock is down 86% from its highs and volumes spike 8 times normal, the market isn't listening to press releases, it's pricing in real crisis. So the question is stark. Is this capitulation panic that sets up a massive bounce back? Or is Lucid actually sliding toward insolvency? Here's what the technicals and options market are telling us. Lucid closed at $4.62. That's the floor we're standing on right now. But the full context is what matters. This stock is trading 86% below its 52-week high, which tells you this isn't a correction, it's a collapse. The 50-day moving average is at $5.81 and the 200-day is at $11.02. Lucid is trading below both, which means every intermediate and long-term trend is pointing sharply downward. But here's what's critical right now. After a drop this violent on volume this extreme, the sellers are starting to run out of ammunition. The question isn't whether Lucid goes lower, it's whether it has already. RSI is at 35.75. That's neutral, not the deep oversold panic we'd expect after a drop this severe, meaning sellers haven't completely capitulated yet, and more downside is technically possible. Normally after a 16% single-day plunge, RSI hits the teens. The fact that it's still in the mid-30s tells you the stock has room to fall further if the panic continues, but it also means we're approaching the zone where statistically a bounce becomes likely. The moving averages are painfully spread apart. $5.81 to $11.02 is a $6 gap showing how steep this downtrend has become, with zero support layers in between. Bankruptcy rumors are the narrative driving all of this, and Lucid's denial carries almost no weight right now. Here's why conviction is marked LOW instead of hold or sell. The market is pricing a binary outcome: either Lucid survives or it doesn't, and right now both scenarios have credible odds. The company has burned through billions scaling production, the EV market is brutally competitive, and profitability is unproven at scale. But low conviction also means the next headline changes everything. A capital raise, a strategic partnership, earnings guidance, or a concrete funding deal flips the narrative instantly. This is why the verdict is watch. You're waiting for clarification, not acting on conviction. Put-to-call ratio is 1.492. That means for every call option bet on Lucid going up, there are 1.5 put options bet on it going down, which is very bearish options positioning and shows smart money is heavily hedging downside. But here's the contrarian angle. When a stock is this hated and this cheap, extreme put buying can actually be a sign of capitulation. If everyone is already long puts, who's left to buy them? Eventually the put bid dries up. Implied volatility at 1.6875 is extremely elevated. Options are priced for tail risk and panic. That means call options are expensive right now, but if Lucid bounces even modestly, those pricey calls can explode because of Vega expansion collapsing. The verdict is watch down with LOW conviction. This is not a sell recommendation. It's a sit and wait for clarity stance. If you're considering a bounce trade, the entry zone is $4.12 to $4.24. That's about 10% below current price, giving sellers one more flush to prove they're done. Your stop loss is $3.03, risking roughly $1.20 per share. The upside targets are $6.00, $6.93, and $7.00, offering 30% to 50% bounce potential. Risk to reward is 0.87, meaning you're risking about 40 cents for every dollar of upside, workable but not generous. The critical support level is $2.37. Break that and Lucid is in genuine free fall. This is a trade setup waiting for confirmation, not a conviction play. Lucid is in the genuine danger zone. Bankruptcy talk, catastrophic price collapse, paper-thin buyer interest. But that's exactly when extreme risk creates extreme asymmetry. The data right now says watch. Don't chase today's panic. Set your entry alert at $4.12 and wait for that level to fill. If it does, you have a defined risk trade with 3 to 1 upside potential if the narrative reverses. But understand the core thesis first. Is Lucid a company worth saving, or is this just a bleeding out process? Until real news, a deal, funding, partnership answers that question, this is a speculative technical bounce, not an investment thesis. Good luck out there.